G'day ladies and gentlemen, and welcome back to another Bitcoin update. Something has happened on Bitcoin that is quite revolutionary, and it's labeling Bitcoin, in my opinion, as something that's becoming some sort of success. Now, Bitcoin's success as an asset class and as an asset in general, being, the digital gold, being a kind of, decentralized currency, an alternative to financial systems, has been in question as whether it's going to succeed or not throughout its entire lifespan. But we're seeing more and more evidence start to stack up in the recent year, specifically during the bear market, that it actually is succeeding and it's actually coming into its own skin as an individual asset that's separate to traditional markets and something that's more akin to gold, hence the name digital gold. So I'm going to look at TA, okay, and then we'll dive into that big topic because it is a major topic, and I highly recommend everyone who invests in cryptocurrency sticks around to hear about it. But TA first, guys, let's get it off out of the way here. We have seen some interesting stuff on TA as well, and a few things to keep an eye on once again. So TA, we dropped below this uptrending line stemming from October. We had a little, fake out below it there. We ended up actually bottoming out quite easily and quite nicely as expected. And as I was saying the entire time during the correction, on the 50 SMA, 3 candle wicks in that 50 SMA bounced off it quite nicely, and it was great to see there for Bitcoin. Not seeing too much, not seeing too harsh of a correction. In the worst case scenario, if we do go back down, we do have a major support zone between 25.2K and 26.7K. I don't think Bitcoin looks bad at all unless we break below 25.2K. I think we have a dramatic amount of support, and I've held this opinion for a long period of time. But, moving forward, if we're looking at shorter term charts, you're looking to see what Bitcoin's going to do in the next move, you can look at the hourly chart. And the reason you can look at the hourly chart is because we have a triangle formation forming here on the hourly. Now, we had a smaller triangle formation on the 15-minute chart, this one over here, that broke to the upside in our last video. I said if that broke to the upside, we'd see a nice trade. We did see a nice trade to the top of this newly formed triangle. So congratulations on the profits you would have made there if you listened. But also the interesting thing that's happening is the weekly chart and the monthly chart. And we'll tie back into the hourly chart in a second. But basically, the weekly candle closes in 1 day and 19 hours on Bitcoin. And basically, the weekly level we're looking at, the major kind of resistance we need to get over is 28.6K. And 28.6K, of course, is the critical support zone we found during the entire bull market here. I'm circling a few zones. And it's akin to what we saw in 2018, 2019 at 6K, this yellow line. It's the same kind of thing, right? So we need to be closing a weekly candle above that level. We closed one a bit above it 2 weeks ago, but we came back below in a fake out. And now we're looking to get above it again. So 1 day and 19 hours until that happens. The monthly chart as well is closing in 1 day and 19 hours, and the critical level on the monthly chart is the blue line here, the 21 EMA, right? And that's critical because basically in every single bull market and bear market and cycle in general, we form the same pattern. We form first a red horizontal support zone, we drop that down below that once we lose the 21 EMA, and we go down and form a yellow one. And that's happened 3 times now. We've seen the third one occur here. The only step we need to kind of get through to finish this cycle here is getting back above the 21 EMA, in which case we'd see a parabolic rally, and that would be on a long-term basis, and that would occur, between now and the end of 2025, and potentially most of it will happen after the halving as per the 4-year cycle. But basically, if we close a monthly candle here above 21 EMA, again, a second one after a fake out, that'd be very good, and we need to close basically the monthly candle above 27.8K, but since it's closing at the same time as the weekly candle, basically in 1 day and 18 hours, we need to be seeing a close above 28.6K. And the reason why the hourly chart is relevant, the reason why I'm bringing this all back to the hourly chart here, is because we can get a pretty good idea of where Bitcoin's going to be in 1 day and 19 hours based on the hourly chart. And it's a pretty good idea because, I mean the word good, literally, it's good, it's bullish, because we're actually in a bullish pennant formation on the 1 hourly chart. What we have seen on Bitcoin is a peak. We came down, we formed a cup formation. We bounced very nicely off of this cup formation. It was kind of a horizontal low as well at the same time, but mostly a cup, right? And it almost could be seen as a W as well. There's many different patterns you can interpret that as. But basically, we bounced offwards here. We went all the way up and we went straight into a triangle formation. That is called a bullish pennant formation. And in the circumstance in which we see bullish pennant formations, we generally, around 74% of the time, according to market data, see those things break to the upside. So if Bitcoin is broken to the upside, actually, it doesn't even need to break to the upside. It can just be going sideways within the triangle as long as it remains above that pink line for 1 day and 19 hours, and it's likely to break to the upside anyway. We're in good territory, and I would say that since Bitcoin is in a bullish pennant formation here, unless something unexpected happens, which of course is possible, but we can't rely on unexpected things. We have to rely on the charts. The charts say that Bitcoin is in a good position, and the charts say that Bitcoin should be fine to close above 28.6K on the weekly chart, and hence close above the 21 EMA on the monthly chart, and hence Bitcoin should be in a very good position to further reinforce the excellent macro situation we are facing. Okay, and by macro situation, I mean the long-term charts on Bitcoin. And I also want to discuss, before we actually move on to the next topic here, total cryptocurrency market cap looks good as well. It's broken above its major resistance, closed a daily candle above it, came back down and actually saw a bullish retest here. We're holding it quite nicely. And Ethereum's in the same situation. We closed a daily candle above this major yellow kind of diagonal resistance, and we closed a daily candle right on top of it, bullish flip, and we should be going upwards from there. So excellent stuff across the board here. Insanely bullish market right now. Great charts. Love to see it. Picture perfect. And if we get those closes in the next 1 day, 19 hours, it will just be adding to the bullishness. I love to see this, guys. It's good stuff. Now, next topic, an important topic, right? Very important topic, is traditional markets, okay, and gold, okay? And I don't speak about gold very often, but I'm going to start speaking about a lot more, and there's reason for that. But first and foremost, I want to look at traditional markets. Again, I encourage you to stick with me here. Stick with me to the end of the video. It's very important information coming up. Bitcoin has been at least, historically, relatively correlated to traditional markets. That correlation has broken away quite a lot, okay, in the last 3 or 4 months. In fact, ever since around August, September last year, it's been deviating, but last 3 or 4 months specifically, as we've seen the bank bailouts, people are flocking away from traditional market assets and they're flocking into Bitcoin. We're seeing cash flow go into Bitcoin while traditional markets have gone largely sideways. We've seen the correlation go downwards. So what does that mean? It means Bitcoin is gaining more independence. And it means as the economy is worsening, Bitcoin is actually acting better. Bitcoin is acting as a hedge against the economy and a hedge against inflation and all that kind of stuff, right? So look, this is important for a couple of reasons, and I'm going to come back to the S&P 500 chart in a second here. It's important for one reason, and the reason is this, okay? Here we go. The correlation between Bitcoin and the S&P 500 and NASDAQ and all that traditional market stuff, okay, has gone down. In the same period of time that that's gone down, the correlation between Bitcoin and gold has reached to levels it hasn't seen in excess of 2 years, okay? In fact, more than that, that's just where the charts goes to. It could be the biggest correlation ever. What does this mean? It means that Bitcoin is coming into its skin, truly, once and for all, as the digital gold, okay? Digital gold. You've probably heard that name, that quote go around. That's essentially something that refers to Bitcoin, well, as what I just said, digital gold, right? It's a virtual gold. It has the same use case as gold, except it's online and you can transact it a lot quicker. You don't have to send it across countries, millions of dollars in freight planes or cargo ships or whatever, however they transport gold. It's much quicker, whatever. Digital gold, okay? The fact of the matter is it's a hedge against the economy, hedge against inflation, and it's an asset people store their value in, okay? It's an alternative. This is great news because this is what Bitcoin was originally intended to be, basically. It's one of the original intentions. Now, with the correlation between Bitcoin and gold going upwards and the correlation between Bitcoin and traditional markets going downwards, we see a much larger decrease in the risk of Bitcoin being dragged down by the economy and traditional markets. Bitcoin has now formed a clear-cut correlation with gold, right? And it's deviating heavily away from the correlation it's seeing with the S&P 500, with the NASDAQ, and it's safeguarding itself, because if things actually do get bad with the S&P 500 and the S&P 500 does actually go down, right, and does get dragged down to new lows, Bitcoin, with this newfound correlation to gold, could be actually fine. It could be in a safe space, and it could go up regardless, or it could at least go sideways, because gold is not something that gets dragged down to the extent of traditional markets do in a recession, okay? Gold is where people hide their wealth or store their wealth during a recession. So it's great to see. I actually can't stress enough how great news this is, and it further weakens. It's a final jab into the bearish case here, and it's supporting the bullish argument just that little much more. It's great to see, great news. I did a little post about it. I can read you this post quickly, but I've already kind of covered it over. Bitcoin is behaving more and more like gold, reaching the highest level of correlation in 2 years, probably more than that, by the way. Bitcoin is digital gold. It makes sense that they are behaving similarly in this economic climate. Bitcoin is proving to be more and more than a clone of the stock market, and it's growing into its own skin, which is excellent, because there were fears, they're disproven now, going around that Bitcoin is just copying the S&P, or it's just copying the NASDAQ, it's not really doing anything, it's just another stock. And those fears have now been debunked once and for all with this data. Great news for the bulls and for Bitcoin in general on a long-term scale. Excellent news on a long-term scale for sure. Now I want to dive into the gold chart. Now that we know that Bitcoin is correlated to gold, and the correlation to gold is nothing but growing as the economy looks worse and worse, what we can see and what we can view is we can view gold as kind of like an asset class to predict Bitcoin, and vice versa, right? Because correlation doesn't mean gold's dragging Bitcoin upwards. It could be both ways, and it could just be not necessarily they're dragging either one upwards or downwards. It just means they've got the same kind of use case, and so they're moving generally in the same direction. But without further ado, we can look into gold, and gold actually looks very decent. Okay, at a long-term scale, gold looks decent. We're on the weekly chart here for gold. Gold is a slow-moving asset, doesn't move very quickly, of course. But since around June or August, July or August 2020. We've started forming this kind of upper resistance line on gold. That resistance line has been tested 3 times, and this almost resembles, not quite, but almost resembles an ascending triangle formation. We've recently, in October 2022, formed an uptrending line, and we can see that this massive structure here, okay, will be coming to an apex, right? There's a smaller one within it, but this massive structure will be coming to an apex on either June 2023 or August 2023. At that point, gold will most likely break to the upside. It could break to the downside as well, but it could also break to the upside. And on the occurrence that it does break to the upside, we will be seeing a surge in the gold valuation and most likely a surge in Bitcoin. Now, given the kind of the economic situation right now, okay, and the fact that people are proven to be flocking into gold during the times of hardship that we're seeing, okay, we can probably assume that it's more likely to break to the upside, okay? And the time frame in which it does that is very important as well, okay? So, middle of this year, end of this year, that will kind of make sense. That's probably when traditional markets will be taking the hit that we're expecting. Now, look, with traditional markets, it's interesting as well. And I'll just wrap up the point by saying that's great news for gold, it's great news for Bitcoin, because it's great news for Bitcoin because of this newfound correlation we've had with gold. Now, traditional markets is interesting, okay? People keep saying over and over and over and over again that it's going to go down. I'm not saying it's not going to happen, but it's interesting that we haven't gone down yet. It's been 7 months, guys. Okay, it's been 7 months. It's been over half a year. All right, we formed the low here on gold, on traditional markets, on the S&P 500 in September and October 2022. It's been 7 months, guys. It's been 2 quarters going on 3 quarters, and we're still up, and we're up significantly, and we're up, bloody, 20% from the lows. So when are we going to correct? That's the question. And people keep saying in my comment section, again, I'm not saying it's not going to happen, okay? I'm just saying, people keep spamming every video, what about when this goes down? First of all, I've disproven that. Second of all, when is it going down? When is this correction happening? It's been 7 months since the lows. We're up 20%. When is this correction happening? We just saw a daily candle on S&P 500 that broke above the major resistance zone that we've rejected from on 1, 2, 3, 4, 5, 6 occasions. We just broke above that. If anything, we're moving upwards here in the S&P 500. Where's this correction? Is it going to come this year, next year? I feel like people have been kind of asking for it to happen or speaking about it happening for like 18 months, but so far we haven't really seen that much of a correction. I mean, it's been like, it was a significant drop. It was a 25%, 27% drop, but still like, the way people speak about it, they act like it's going to be this massive, massive, massive crash. And all I see is the S&P 500 up 7 months. 7 months in a row is a long time, guys. And it's up 20%. And, 20% on the S&P is a massive gain. We have to drop, 16% for it to even get down to the new lows. So, when is this going to happen? This is why I don't like trusting these one-liners, these random quotes, these, traditional market's going to correct, and that's it's going to go down, It's like, yeah, okay, it might. It very well might. I'm not saying it's not going to at all. Again, I'm clarifying. I'm not saying it's not going to go down, but I'm just saying, if you just trusted the charts, instead of trusting these random people, who just say random stuff, you'd actually be in profit, and you wouldn't be waiting for it to drop for 7 months, and it's up 20%. You'd be in profit. Just trust the bloody charts, guys. The charts reflect the macro. It's not hard to understand. The charts reflect what's going on in the macro. The charts foreshadow the future. Unless it's a black swan event. That's the only thing they can't foreshadow. And we don't see those very often. The last black swan event we saw is COVID. So, they don't happen very often. It's been 3 years since we saw an actual black swan. So, let's not rely on black swans. Trust the charts. Trust the patterns. I'll tell you right now, if the economy looked really, really, really bad, and it looked terrible, and everything was trash, and everything was going to go, and everyone knew for a fact it was going to go down, these charts wouldn't be going upwards. They would be going downwards because they'd be foreshadowing the future. Now, you could make a very strong argument. Again, I'm not saying it's not going to go down. I'm just making the case. You could make a very strong argument that during this initial collapse here that lasted over a year, that is when, we were foreshadowing the economy looking bad and bad and bad. And ever since October, we've actually, the economy's not good yet, but people have seen that on the horizon it's going to get better, and hence the markets have gone up regardless of what the actual state of the economy is. It's very important to note, the stock market, okay, and markets in general do not reflect the present day situation. You can have the worst economy on planet Earth, and the stock market could go upwards because there's hope in the future that it's going to look better. People try to predict things. They don't react to situations as they happen necessarily. They predict what's going on in the future, and hence it makes sense that markets look forward and reflect what's going to happen in the future. So I'm not even 100% convinced that the stock market will even go down to new lows. What I do know is this, okay? Could very well happen. I don't really care. I don't look at the stock market very often. It's not relevant to my analysis for Bitcoin because the correlation's so low now. But look, what I will say is this, right? This is the first time in the S&P 500's entire price history that the Federal Reserve has raised rates while the market has been trending downwards. Okay? So we're seeing something we've never seen before. We're seeing a unique thing, a massively unique thing that we've never seen before. How do we know that's not going to cause a unique reaction, such as what we're seeing now, such as an early bottom on the S&P 500 on the NASDAQ? We don't know, okay? We actually don't know. The stock market right now is pure speculation, okay? Purely speculation. With Bitcoin, we actually have data, actual data. 4-year cycle theory, for one, 12-year trend, 5 micro trends within it, backed by the presidential cycle theory, backed by the halving, actual hard data to suggest that it will go upwards in the long term. We don't have any data with traditional markets. So I think that you need to trust the charts. You have to remember, you're a cryptocurrency investor. You're not a freaking stock investor. You're a cryptocurrency investor. Trust things that are relevant to crypto. Okay? And guess what? If we lose the important levels, we lose this here, we lose this there, then you can flip bearish. You don't have to be bearish at highs just because it's controversial. You be bearish when the valid points are actually there to support the bearish argument. And unfortunately, guys, right now they simply are not. I thank you for watching the video, guys. I hope you enjoyed it. Let's look at a few things before we end the video. BitGet Exchange, okay? 5 times lower fees than Binance, non-KYC, best exchange on the cryptocurrency market. I've been using this exchange for about over a year now. Over a year, since March last year. I reached out to these guys for a partnership. They did not reach out to me. I recommend that everyone watching the Rules of Crypto YouTube channel right now goes to BitGet, goes to my referral link, and signs up, getting a 15% trading fee discount for life and access to an exclusive reward center using my referral link. Do it. Help yourself out as a trader. Save money on fees. Stop spending ridiculous amounts on exchanges that don't need the money. Go and get a cheap exchange here on BitGet and line up with the true fundamental values of cryptocurrency by using this exchange. Use my referral link. Go and do that. Crypto Academy, guys, 10-unit course, become a trader. You want to learn how to trade, you want to learn how to analyze charts, so you can stop relying on speculation, actually rely on data. You can do so using this course here. We have included everything you need to know as a trader. Everything I personally use as a trader is in this course, okay? And you can find out how to trade, how to find coins, how to use charting patterns, whatever, market patterns, indicators, candlesticks in this course. Throw us an email at cryptoacademycourses@gmail.com. And finally, guys, VIP group. If you're interested in trading altcoins with me on the VIP group on Telegram, you can do so. It's $100 USD for 3 months. You'll get access to altcoin trading signals. You can make a bunch of money. If you don't have to take my word for it though. You can take the word of our results. I've released every single trade we've done in results for the last 2 quarters, for the last 6 months. Okay, all the results, the wins, the losses, everything. I've released it all. It's all in the Telegram link below. You can find the description. Click on that link and click on the PDF documents. You can find results. You can see our historical trading record, and then you can decide if you want to join the group or not. I recommend you do, but hey, it's up to you. Check out the results and find out for yourself. Thank you guys for watching. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.